Alright, this is a quick video on Forex target trading using support and resistance levels as targets. We're going to be recording this, so we're going to do the disclaimer. Nobody's telling you can make $3 million using this technique, and the possibility exists you could sustain a loss of some or all of your initial investment. Therefore, never invest any money you cannot afford to lose. Be aware of all the risk associated with foreign exchange trading, and seek the advice of an independent financial advisor if you have any doubts. So, true support and resistance levels are found only on a 240-minute chart or higher. Many big traders use day charts, but that's the targets are so far apart when you use a day chart that it's not really relevant for us as in day trading. Okay, and then a lot of other people use support and resistance down on a 60-minute chart. Those are marginal at best. They're blown through all the time. It's because our goal is to figure out what the big boys are doing every day and then do what they do. And they do their analysis on a 240-minute or higher chart. They enter on the 60-minute. So those levels on the 60-minute are very marginal. But why are they important? Because they are the big boys' targets and they are their bounce points as well. So these are key levels that we have to know when we're target trading in the Forex, and you have to learn to target trade in the Forex. If you don't do that and you're clicking out for 5 to 8 pips, you are cannon fodder for the big boys. Why? Because you must be 90% correct to have a winning record in the Forex trading for 5 to 8 pips. And unless you're the best trader that's ever lived, that's not possible. So what does support look like? Okay, well, Tom DeMark helped define it for us, and it's very simple here. We have one wick sticking down with to the right and to the left. That's what defines support, and they can look like anything you can imagine. Now, occasionally you get a set of twins, in which case these two candles right here act as one. Since that's the way they are, okay? Then you have to have to the left and to the right of a set of twins, all right? That's what support is. Resistance is just the opposite. We have one candle that sticks up with to the right and to the left. That's resistance. And once again, if you have a set of twins, it's that acts as one candle, all right? Nothing major or fantastic here. But how do we use it and how do we understand it, okay? So when you're target trading and you're looking for support or resistance, this is an easy illustration for you to understand. I'm using a 3-story apartment building here, and in terms of support and resistance, you are always on the second floor. Now, when you're looking for your ceiling, let's say you're in an uptrend and you're looking for your ceiling, how high will it go? Well, you're looking for your ceiling. Well, that's not the ceiling is not the guy who lives above you, it's his floor. The guy who lives below you's floor is your ceiling. So an uptrend above you's floor is your ceiling if you're going up. If you're going down, it's just the opposite. Yes, this floor is your floor right here, but it's not the floor of the guy who lives below you. The guy who lives below you, it is his ceiling, so we are looking for his ceiling in a downtrend. And that's how you remember it, all right? So let's take a look at the charts here now. And, I'm up here in a 240 chart. Let me go to current here. And you can see we're in an uptrend, okay? So I need to find out where this might go if it's going to continue the up move. Where will it go? I need to find my ceiling. Where do I find my ceiling? The guy who lives above me's floor. So I go back here, and fortunately I have an uptrend right not very far back, all right? So I'm looking for 2 candles to the left and 2 candles to the right, and there's one right there. There's 2 candles to the left, 2 candles to the right of this set of twins, as you can see. When I get up to here, I got another one right here. 2 candles to the left and 2 candles to the right of that right there. Now this one right here is support, but I'm already above that, as you can see. All right, but let's just mark it so we can see if the market knew where it was. Okay, so here we are. We're coming back down to current here, and you can see up they went right to the support. That was the ceiling. Where's the next ceiling? Right here where we are currently. So if we break north of this again, this is our next ceiling. You see that? Now, we take that off so we don't confuse this. And let's talk about, okay, what if it breaks to the downside? Now where's it going? Well, that would be my floor, which is the ceiling of the guy who lives below me. That happens to be a downtrend. Well, fortunately there's one right here, okay? And so we can go ahead and take this downtrend right here, and we can see this is where we currently are. So I'm going to go any support resistance over here below me, I'm going to mark. There's one right there, a set of twins with 2 to the left and 2 to the right. There's another one just a little bit below you, and that's very important to find them, even if they're this close, because that means they won't get through this very easily. There's one very easy to see here, 2 candles to the left, 2 candles to the right, another one right here. This one we already caught over here, and there's one right here, okay? So If we break to the downside, we are coming down to here, and we will not get through this one very easily, as you can see. But let's do a downtrend. Let's do this downtrend right here, and see if we can find why they stopped where they stopped here. So I'm going to take all this off here, and I'm going to go back in the past. And so we're just making an assumption that we've reached the top here. We've figured out we've reached the top, and we're now looking for our floor, which is the downtrend behind us, back here in the past. So I've got to scroll back. Let me just mark this so we don't forget where we're at. Right in this area right here. Right? And I've got to come back and find an area that's a downtrend in that same area. Here we go. Okay, so I'm scrolling up and looking to see if I have anything. Didn't have anything close enough there. I'm still going back. Look how far back I have to go. Sometimes you have to go way, way back in the past to find these downtrends. Okay, and here we are. Okay, so I've come all the way back here. You can see this is the current price. All right, so if I'm looking to go to the downside, where would I want to go? Okay, this is a downtrend, as you can see. So I'm going to take the support and resistance. There's one right there, right there. There's this one right here, this little shelf there. And we come up here, there's one right there. And as we work down, look at this one right here, kind of a hidden one right there. To the left and to the right there. Another one right there. Let's see if we have any more. Yeah, we got some more down here. And as we continue on down, we see them. There's one right here, one right there. Don't miss these ones. We know they're close. Don't you count them as two separate ones. One right here, one right there. Okay, and that should be enough. All right. So now we're going to go back here, and we're going to scroll to this uptrend, downtrend right here. Remember. All right, so we're assuming we're going to break to the downside. So my floor is going to be this ceiling from the downtrend below me. All right. So let's just see what happened here. Boom. Well, you can see that they knew where this one was, and they broke right through that one. That's actually very strange that they did that, but that's okay. They did it, and right down to that one. This one they're going to either have to bust through it, or they're going to have to bounce off and go again. As you can see, tough one right there. All right, we'll keep on going. Let's see if we can ever break that. Yeah, we finally broke it right there. And see if we go any further down. Well, that's the end of that downtrend. But you can see that the market knows exactly where these lines are. And because they know where they are, you got to know where they are. So how do you learn them? It takes 300, minimum of 300 up ones, and there's 300 down ones you got to do. So 600 total. That's called reticular cognition. Your brain needs 300 of anything to build a database. And then you have to take a 24-hour period where you take a day off and don't do any, and that allows your brain to build a retrieval system so that when you go to do them again, it can match them up. So that's how it's done, folks. It's a quick video. We teach this kind of stuff all day long here at Forex Target Trading. So thank you for watching. And if you want to see some more great free training, come visit us at proacttraders.com. We train free every day in the market, live in the morning in the New York session. Have a great day.